Hey everybody, Economic Ninja here. I hope you are doing well. We're going to talk about a couple of different things. The Federal Reserve raising their rates, and we're going to talk about the implications or what's going to happen with that. I'm going to do a little bit of I'm going to do a prediction. I don't do a lot of predictions. Well, I guess I do. I'm going to do a prediction over what I think is going to happen over the next 90 days. And we're going to talk about student loan debt and this massive call for canceling student loan debt. I'm going to talk about some behind the scenes stuff. People probably don't understand how this works and how they manipulate you guys, all of us, all right? So we're gonna talk about that. So first off, the Fed funds rate was raised 50 basis points, which equals 1/2 of 1%. Score one. Good job, Jerome Powell. You didn't do anything to fight inflation today. That is the biggest rate hike in 20 years. To give you guys an idea, it is a big rate hike in Fed terms. But when the Fed doesn't want to get a hold of inflation, they just go ahead and just like give you a little bit more than you expected to try and appease the peasants. I don't mean to insult you. I mean to insult them, the Federal Reserve. Quite frankly, this is not enough to stop inflation, but let me explain what it's going to do to your personal finances. So the Fed funds rate, first off, a really brief overview explanation of it. It is the rate that is set by the Federal Reserve for banks to loan each other money overnight, right? These are excess reserves that banks have. If you have excess reserves in your bank, you keep them on loan with the Fed, and the Fed loans them out to banks that need it overnight if they might have borrowed or loaned out more money than they should and need to recapitalize, need some cash on their books to stay within their target range of reserve requirements, okay? So hopefully I gave a very basic overview of that. Now, we've seen this rate explode in the past, like during times of tragedy, 9/11, or during the Lehman Brothers collapse, where they spiked to 6.5%, right? We saw it really explode when the economy started collapsing in September of 2019, a very key time where it exploded to over 10%. And I don't remember I want to say 12.6 it hit. I could be wrong. If you guys know, put it in the comment section below. But then ironically, weird, about 4 weeks later, this amazing, weird, mysterious illness came and shut the whole world down. It was weird. Almost like it was there to be able to get banks to be able to print money like crazy and sort of gloss over this collapse that we were in the middle of in 2018, 2019. So now a lot of people go, well, how's this going to affect me? Now, a lot of people have seen mortgage interest rates explode, and a lot of that is because the 10-year bond is falling, and which means the yields are rising, okay? And mortgage companies banks like to go off the 10-year bond, not directly price it based off of it, but really it does track it because banks know that the average mortgage is held around 10 years, a little under 10 years. People go through interest rate cycles, they refinance or they sell their home, okay? So that's why they like to do it. It brings a lot of stability to lending money out for homes, all right? So that's been rising. But if you notice, it really started rising in earnest when the Federal Reserve and Jerome Powell came out and said, okay, guys, we're going to start raising rates in December. They said, we're going to start doing this. And that's when you start to see that 10-year really start moving up. A lot of investors in the know understand that the economy cannot handle higher interest rates, okay? Even though interest rates now have to come up and the Federal Reserve is backed into a corner because they know inflation it's gotten out of control and it's going to get worse. It is going to get worse in the near term. The economy cannot deal with the rise in interest rates. And I'll give you an example. See, as the Fed starts to rise the Fed funds rate, what happens is all other interest rates start to rise alongside of it. Not only mortgages, but credit cards, student debt, which we're going to be talking about in a sec, all kinds of debt, right? They all start moving up. Auto loans, things like that, credit cards. Now, you have to realize that employment is at record highs. Like, I don't care what metrics they're lying to you with. The facts are we have record unemployment. This is absolutely phenomenal. Simply because of the story I did earlier today. If you haven't seen it, take a look at it. And that was that we just have record people just leaving their job, just quitting, right? We have record amounts of job openings, right? People cannot afford higher interest rates on all of their debt. Most people carry massive amounts of debt. As a matter of fact, credit card debt, student loan debt have never been higher. That tells you where we're at as an economy. It tells you the true strength or the health of an economy as well, okay? So let's dive into this story about the attorney generals and this massive call for student debt and then, like forgiveness, right? And then we're going to dive into my prediction. Okay, so this story came out. I'm going to link it below. It's entitled 8 Attorney Generals Call on Biden to Cancel Federal Student Debt for Every Borrower. Now, just recently, Joe Biden forgave $10,000 per borrower, right? Now, first, I want to explain, these are a lot of keywords. Excuse me, there are so many people with a ton of debt, student debt, that is hanging over their head. And student debt is one that cannot be resolved in bankruptcy, right? There's a reason for that. And people are literally finding themselves to be in their mid-40s and they're still paying off their student debt. I have people that, brag in my own life that I used to hang out with that are in finance, and they brag about, how smart they are and how they work in finance, and they're completely in debt up to their eyeballs, and ironically still owe on their student loans. And they've been out of school for 25 years, right? That's nothing to brag about. I mean, you could be in finance and not even pay off your student debt. I don't care what your reason is. You're probably not doing it right. But these debts are hanging over people's heads. I had a friend of mine, a good friend, his wife just put on Facebook the other day that she just had paid off her last student loan, and it actually came because of forgiveness. So the portion was forgiven, so they didn't technically pay it off, but it's now gone. And it was a huge burden off of their shoulders. Now, that's that much more money that they can either save or, put into somewhere in their budget. So that's great. But what's happening behind the scenes is that they're using these triggers, these keywords, these catchphrases, these hooks to hook you as an investor, as a user of this nation's goods, a consumer, to try and drag you along, just trying to give you little bits of relief, but not a ton. If this happened, let's just say the president just signed an executive order and wiped out everybody's student debt, you'd have quite an uprising. You'd have a lot of people that never went to school, that have been busting their tails in the trades, that would be quite upset, right? And going, that's not fair. These guys went and borrowed money and then they became my supervisor. A lot of them don't even know what they're doing in the field they're in. But hey, you got a business degree or marketing degree, and and now it's forgiven. Whereas a lot of people, there's a certain percentage of people that go to school, they get debt, and then they rarely are even using their degree in the field that they studied, or they're not using it at all. There would be some serious tensions in the country. I'd be actually very curious to see what happens there. But the fact is, right now, to give you an idea of the scope of how big of a deal this is, it says even before the pandemic, the country's outstanding student loan balance exceeded $1.7 trillion. And of course, it says here that it poses a larger burden to households than credit card or auto debt. You tell me, do you think the president or Congress is going to forgive $1.7 trillion? No, they're not. To give you an idea of the scope, when Lehman Brothers crashed and banks were literally threatening Congress, if you don't bail us out, we're gonna have blood in the streets. That bailout package, the first bailout package, equaled $700 million. Okay, this is 1.7 trillion, much bigger number, all right? I get that there's more and more money being printed and it's funny money, but right now that's a lot of money that's owed back to the government with interest. If they erase that, think about the deficit and how much more it would balloon if they forgave it. So I wanna bring people back to reality, okay? You have to plan like this is not going to happen. Do not be deceived by the masses that your debt is gonna be paid off magically, okay? Now with that being said, let's finish this with the predictions. Because a lot of people have asked me, Ninja, where do you think this is going? Let me tell you what I think. And do not take any of this as financial advice. But let's timestamp this. A lot of you remember when I talked about lumber, when it was going to come down, then it was going to explode back up in November. You've heard me talk about mortgage rates exploding back in December before it even did it in January. So we're going to talk about the next 90 days. I believe the Federal Reserve is not going to be able to get the benchmark rate past 1%. Okay, I believe we have one more hike ahead of us. And quite frankly, I'd be shocked if that even happens. But I believe 1. We're going to get to 1. They will not be able to bring it to 1.25. And I use history as an example. In 2018, the Federal Reserve had raised rates from 25 basis points to 225, 250 basis points. So it's at right around 2.25, 2.5%, okay? The economy couldn't handle it. Companies' earnings were coming out, they were abysmal because they couldn't borrow money at those lower rates anymore, and their margins were suffering, and company earnings were just abysmal. And so the stock market started to sell off in 2018. Started from about October, ended around Christmas Eve of 2018, and the Federal Reserve had to do an about face, okay? So that showed right there that the economy was so weak back in 2018, couldn't even handle 2.5%, all right? Now, since then, we've had tragedy in our economy. But what a lot of people see is, the economy booming because stock market's taking off or house price taking off. I actually look at it the opposite way. And you have to have a contrarian view to be able to understand these markets, to really navigate them, honestly, because I go against the herd. I do not swim with the current, I go against it. That's where I've seen my most success. It could be a lonely road, but that's okay. My friends are successful, so I just put myself around successful people. I do not believe the Fed's gonna be able to raise past 1%. We are going to see an about face, and the stock market will have euphoria. But I believe, and it's gonna rip roar, and it's gonna be what I believe is to be the final blow off top of the stock market. And I believe that is gonna lead us into a collapse. And that collapse can happen within the next year, but to be honest with you, I'd be surprised if it didn't start showing up by the end of fall. All right, so I want you guys to remember this, because if I'm wrong, I'm wrong. You shouldn't be trading off this. This is not trading advice, financial advice. This is life advice. Take both sides of the story and chew on it. You're being told a narrative in one that your loans are going to be forgiven and everything's going to be great. You're also being told that the inflation is going to be taken care of by us just like literally pissing on a fire. I got to be honest with you guys. That is the truth, and you got to say it like it is. The Federal Reserve does not care about getting inflation under control. Why? Because trust me, in the coming days and months, you're going to start seeing that as we transition to a new digital currency, the only way that we can get away with that, or people will buy it, is if there is extreme pain in the markets. And so I want to prepare people. Start to look to diversify outside of the dollar, get into really good, solid assets, things that bring you in cash flow, things that will not be susceptible to a market collapse. All right, guys, I thank you so much for watching. Thank you for everyone that's out sharing the videos. You guys are awesome. Economic Ninja is out.